Hi, this is Malik from R3 Mortgages. Hope you are all well and keeping safe. Just wanted to bring you a bit of an update in the mortgage market. As you can imagine, the last 6-7 weeks, however long it's been, in the mortgage market we've seen a lot of turbulence, let's say, but there do seem to appear to be green shoots ahead. A lot of the issues that we've faced is that obviously because of the restrictions and the lockdown, valuers couldn't physically attend properties to give lenders an accurate assessment on their value. Now, because of this, and especially being the case with the specialist lenders who for their funding lines require physical valuations, this has presented a challenge. And credit to the mortgage market, a lot of the lenders have come out and tried to work around it using desktop or automated valuations to try and keep transactions moving. The problem with those being is that a lot of them rely on data and indexes, and in the last 3 years with Brexit, we haven't had a huge amount of liquidity in the property market to draw upon those transactions. So the issue with some of those transactions, again, if you use those valuations, is that you can have down valuations. Now, in May 2020, what is the value of a property? You read one newspaper source or article and it tells you that the property market is in dire straits and we're going to see record collapses. During the credit crunch, we didn't see a huge movement in property prices as people just stayed where they are. So there's been a lot of speculation with regards to those. However, within the last day or so, the government has allowed the estate agents to effectively reopen, property viewings to happen as long as they can be done obviously compliantly with the necessary rules and regulations, but also for the valuers to physically go and attend properties. Now, there have been a number of transactions that have stalled during the period of the lockdown. However, I can understand a bank or a lender wanting a physical valuation for a property. If they're going to lend hundreds and hundreds of thousands of pounds, they want to make sure that the asset that they're taking is going to be worth the amount that you're ultimately paying for it. And as fantastic as technology is at the moment, at the higher loan to values especially, they need that reassurance. So now what we're going to see in the coming weeks, hopefully, is the return of valuers being able to go out and value the properties. There will be a backlog of transactions where the lenders have just paused them while they've been seeking a resolution to this, which a lot of the valuers will process in the beginning, and then any new transactions that come on board hopefully will get added onto that queue. Now, with this movement and the valuations returning, or the ability for them to occur being returned, hopefully we should see a return to the markets of the specialist lenders and even an increase in the loan to values. During this issue, a lot of them have restricted the loan to values that they've been able to operate, if they're operating at all, but hopefully now we shall start seeing a return in the higher loan to values. It's affected obviously a number of transactions, especially on the buy-to-let and the specialist buy-to-let side, limited company buy-to-lets, which we do a fair proportion of, multi-unit blocks, HMOs, those have been affected. So I don't think we're by any mean or stretch of the imagination through the waters yet. However, the green shoots are starting to appear. So hopefully in the days and the weeks to come, we shall start seeing a return to some sense of normality. So I just wanted to give you a bit of an update. I've been away from the camera for some time. My hair is out of control. I think this is the longest that I've had it. I normally go to my barber and ask for the Kim Jong-un cut and get it. So I found that particularly difficult. But I hope all of you are keeping safe during this period, and I shall see you all soon.